Welcome back to Primary Source China Investment. Peng.guo and I are here with show E3. And anybody who gets the picture reference gets a fist bump. So this week, we wanted to talk about all of the things that are happening with a variety of asset classes, because anybody even tangentially following the market and the news has seen the sell-off in equities, the volatility in fixed income, commodities, FX. So this week, we're going to do a little bit of rapid fire and get to each of those asset classes and try to figure out, what's happened and where we're going. So first up is China stocks. So year to date, the CSI 300, the major market index, as measured by ASHR in the US, is down 25%. KWEB, the tech-heavy index of Chinese firms, is also down about 25% year to date. And before we get into some of the macro reasons, it's important to mention that annual volatility for the CSI 300 is 30%, meaning that this down leg is normal. From a value perspective, the CSI trades at about a 12 PE, which is close to a 5-year low. On the macro front, COVID is the biggest headline, with GDP growth coming down as lockdowns ebb and flow. But unemployment, unemployment in China, the last print was a 5.8 for March. That was up from 4.9 in October. And we can imagine that unemployment is going to tick up on the mainland. So that's a lot of things that are happening that are affecting the China stocks, listed in China and listed elsewhere.
From our calculation, like the CSI 300s, actually the volatility 30% really include the downtrend. If just for the uptrend, the volatility probably around 17 to 20%, much less than the downtrend. This is why we keep saying follow the uptrend and follow the new Zhonghan indices, because that one just reflect the market trend of the different asset class. For this year, most of the time, the index just get flat. So because it's not in uptrend, why do we need the investment in the downtrend market? The same things probably can expand to other asset class.
Yeah, we talk a lot about the follow the trend. The problem with a lot of allocators to China is this idea of set it and forget it. That strategy doesn't work in a high volatility environment. And for the past couple of years, China's been a little bit lower volatility than historical. And now we're seeing that rush back to historical. And as you say, Peng.guo, the downside volatility is greater than the upside volatility, which really makes for a miserable experience.
That's right. So think about it. The stock market is also reflect the economy. So it's reflect our environment. Our environment get a lot of the changes. In my personal opinion, a lot of things is changes and risk is unnecessary bring by the people. They just make the change and increase the uncertainty in the market.
Talk about that. On the US listed companies, we've been talking about this for months. There was just this week another 80 US listed Chinese stocks that'll fall under the SEC's requirement for greater disclosure. When we first started talking about this, there was like 150 to 200 names, and that market value was about $2 trillion US. Since then, market values come down to about 1 trillion. And if I look to see what the end game here is, it looks like delisting for a lot of these small guys, and the largest, and when I say largest, those with an international footprint or those that do some overseas business actually have a reason to be listed outside of China. Those will probably step up and conform to the SEC's requirement. I mean, the CSRC and the SEC keep saying that there are discussions in place, and more discussions is better. But I do feel like only a few of the largest and those with an international aspiration or footprint are going to be the ones that are going to stay listed in the US. Otherwise, they're all going to go back and list in China or in Hong Kong or something like that.
That's right. In international companies, they go to the United States, they get listed here. They really believe United States is a fair big market. That's why people are going here. The problem is each country, they have their own details to compromise the different regulations. As we know, the United States got a lot of the regulations, and hopefully this is the standard regulation for all the international companies. And I see the news right now, like the SEC's officers go to the Beijing, they try to negotiate something. Hopefully they can reach some agreement, which is good for both countries.
And I think some of these companies are going to look to list in alternative places. I read recently that NIO is looking to list in Singapore. So there are other alternatives for these companies, and I think they're going to go seek them out.
Yeah, I think people just pay too much attention on the conflicts. So that's they put the wrong weight in the small conflicts.
Actually, it's good. It's good that this conflict is coming up now. True. It's been something that's been out there for 10 years. There was this ambiguity for 10 years. So at least now we'll get past the ambiguity, and then hopefully everybody will understand the rules, and then we'll have a lot more compliance.
Yeah, that's true. They should resolve these things at on the first day before the listing. Rather than after listed. Otherwise, this really causes a problem for everybody. Think about the US is the largest financial market. China is the second largest economy. It makes sense for China companies, at least in New York. Otherwise, you don't want the United States just to put only United States companies in here. That doesn't make too much sense.
Well, that's the point. 58 other countries have signed on to the SEC requirements. China is the one that's sort of hanging out there. So hopefully we'll get everybody onto the same compliance.
Yeah, they should resolve this one on the first day.
Yeah, well, here we are. So the other asset class I wanted to talk about was fixed income, obviously. And we talk about CBON a lot on this show because that's really the only real access for U.S. investors to access mainland China fixed income. And that's down 5% year to date. But interestingly, the renminbi has depreciated about 6% in the past 5 weeks. So the underlying bonds are performing as expected, but the currency has moved very quickly. And I think this is an unreported situation in the financial markets. The flight to dollars is real. Flight away from CNY, renminbi, is also real. Beijing is trying to implement policy to reverse that trend, but it does anecdotally look like this flight is not over yet. So the bottom may be near, but is not in yet. What's your thoughts, peng.guo?
From the US investor, they really want to just see the final result. Overall, I think China-related bond get much better performance than the US bond. Like the TLT, even the AGG is already just keep dropping. So I think if in the past 1 year or 2 year invest in China-related bond, that should be a good choice.
Right. All of those names in CBON, for example, those are all either state-run enterprises or large financial institutions. These are not speculative names. I want to emphasize that. It's the headline is property developers are going bankrupt or something like that. But those kind of names don't make it into an ETF like CBON.
Yeah,
so those kind of large cap, well funded, and actually probably beneficiaries of any Beijing stimulus. Probably all in a good position to capitalize. And I think for the equity side as well, you want to, if you have to allocate, you have a mandate to allocate, you need to stay in those large cap names that are going to be well supported by the central government.
Exactly. So I think we really try to should maintain as well as keep a very healthy capital market. So you don't want to manipulate or even bring too much risk, or like especially political related risk. I think the market will identify what's the risk. Some companies should bankrupt, and someone would like to take the high risk. So they get their own choice. The most important thing is the market should be fair and open.
And the only other thing I would add to that is if you can't handle downside volatility, you shouldn't be in risky asset classes.
Another way is seek the professional advice how to handle the downside risk. You can contact us.
With that, we're going to leave it with show E3. Thanks for tuning in. Make sure you click the subscribe button, and we'll see you soon. Thanks.
Thank you. Have a good weekend.